Boat play. It's actually Gary. Gary Huang. He's from Singapore. Welcome to 21.6 The Net. Thanks for getting caught in the net right here with Innovative Strategies. Today, Bill Haase is going to be talking about, well, life happens. What to do when it happens. This is not your grandpa's financial literacy show. This is Innovative Strategies.
Thanks, Kate. Thanks for the introduction. Today, I had something recently happen to me. Not to me, but in my family.
That looks good.
And it just made me really double down and think again. And even though I'm in this business and industry, this is what I'm supposed to be doing all the time and thinking about. But quick question for you.
Yeah.
What are some of the things in life you can't predict?
That you can't prevent?
Predict.
Oh, predict.
Cannot predict.
The weather.
Yeah, they're terrible at that because it was supposed to pour last night, and here we are again in the biggest drought ever.
What the CDC will put out next. Too soon, I'm sorry.
The revolving mask.
Yeah. You can't predict what's going to happen in 10 minutes.
Yeah, in my world, you can't predict the markets, right? You can't predict what's going to happen in the markets.
Interest rates, they always ask, hey.
You can't predict interest rates, can't predict taxes, and a lot of advisors are out there saying, well, tax-free retirement and we can do that and set that up. And, wouldn't you rather pay the tax bracket you're in now? Because, of course, they're going to go up in the future. And quite honestly, you can't predict that. You don't know that. I never say that, but others do, and then there's also the folks that are predicting that the market's going to have a turnaround at some point, and in the near future. Some predict 6 months, year and a half, and so on. It will happen, but when? It's not there yet.
Right,
it's not there yet. Cryptocurrencies, are they going to be the currency of the future? The more I learn about it, the more I think it. The more I believe it will be.
Well, what's the future? I mean, cryptocurrency's here.
Well, they're here, right, but the future of El Salvador, where they decided Bitcoin was going to be the currency for the country. I think you're going to see that grow and grow and grow.
Bitcoin is like sheetrock or Kleenex, right? I mean, that's just there's several cryptocurrencies out there.
Right. Yeah. There's a bunch of cryptocurrencies. There's a new one coming out as well. Part of a play that I'm in on. But and getting in on it is really how you learn,
right?
Because you're kind of forced to, and that's why I got involved in it. But it's kind of like continuing education for me. But the big thing that you can't predict is life happening. And last weekend I went to my wife's family annual reunion up in Wisconsin.
Oh yeah.
But it was a sad event because her uncle had been diagnosed on July 3rd with pancreatic cancer. My wife's father passed from pancreatic cancer, and these two are brothers. But he was diagnosed July 3rd. By July 14th, they stopped all CAT scans and they stopped all processes and procedures and just said, you've got 1 to 2 months.
Wow.
Now it's been about 3 weeks, and I can't see how he's going to make it 2 months even. He's gone downhill fast. And so his wife, my wife's aunt, pulled me aside and said, I'm going to need your help. He was a CPA, so he controlled all the monies and the finances. Yeah. And you hear me say this all the time. The spouses don't talk about finance.
They don't.
So she's in a mad scramble to figure out what's she going to do. They have a son that needs some attention, and that can be costly and expensive. And and plus she's got to live her life out.
Yeah.
She's 70, he's 74. That's part of, this is what life happens. You can't predict, whether you're going to get into an accident or when your time is going to be called upon to come up to the good Lord, but it's it happens all the time. Last December, actually, I had a next door neighbor. He recently moved away, but on Sunday night, his wife posts on Facebook. She said prayers for Scott, and he's going back in the hospital with complications of COVID. And yes, it's real. And on Monday morning, we woke up to rest in peace, Scott. I mean, it was a stunning shocker. Wife and 2 young kids. He was 52 years old.
Yeah. Well, that's my age, 52. So that's scary. Number one. But life changes in an instant, not
All the
slowly,
time.
In an instant.
All the time.
Yeah.
You
Morning, Eddie. Eddie says, are there any cryptos to look into?
I can tell you, I'm involved with Ethereum Lite.
Ethereum Lite.
Yes, ETL. So Ethereum Lite is a new coin coming out. I guess currently you'd kind of consider it a token.
Mm-hmm.
Once you understand that world, and trust me, I'm still just learning. But Ethereum Lite will be coming out, and August 4th, I believe it's going to start trading on a number of exchanges. Right now, it trades on the Australian exchange, and that's the only place. But there will be more. I've heard anywhere from 4 to 15 more exchanges by August 4th. And it's based on smart contracts. So smart contracts, you can Google, look it up. Wikipedia has them, but then a quick run is smart contracts are contracts that are written in stone, which are the types of contracts that banks, businesses, and government like to have. Right. If you ever get involved in a home loan, Kent?
Yeah.
You ever get involved in those?
Just closed one yesterday.
Yeah. So, what happens with home loans, that all of a sudden that interest rate might change a little bit while you're in the process, or the amount of money you have to bring to the table, or the amount of money you might be getting back.
That's right.
Things change. That's not a smart contract. A smart contract can't be changed. It's locked in. And actually the ETL process is part of a smart contract. So it's written in stone, and you get involved by you wind up buying Ethereum, which unfortunately it's been going straight up, which means that gives you less buying power if you're buying into it. And then you swap those for OAPs, which are One Alexa protocol. And those are tokens, and then those tokens, for each token you have, you can swap that into 210 ETLs, Ethereum Lights, so 210 coins.
Right.
And typically, people are buying in small. I've talked to a number of people. I say, look, just play the game. Just put in a little bit of money that you can afford to lose.
Yeah. And one of the reasons too that you look into Ethereum Lite is they're looking to change the world. They're doing good things philanthropically.
Good.
Right.
Yeah. There's a humanitarian aspect to it and a side to it. And as I mentioned to you, the team I'm involved with and the people I'm bringing in, we're going to purchase some of it for a friend and neighbor of mine who he doesn't even know it yet, but
he does know.
He's an ex-Navy SEAL, and he got pretty beat up. And so
he's a Navy SEAL. He's retired.
He's retired.
Right? The Navy SEAls are always Navy SEAls.
Yeah, I mean, he's retired. He's young.
And
he's had some challenging
been
times.
through the trenches. Sure.
But you can just see, you just sit with a guy and have a beer, and you can see he's got issues, physical issues.
Yeah.
So that's part of what we do, is help out other folks like that. So we're going to bring him into the game. He doesn't know it yet. We're going to once we.
What about crypto mining?
Crypto mining. So you want to crypto mine? Most people are crypto mining Bitcoin.
Yeah.
Have fun with that. Good luck.
Yeah.
It almost costs more to crypto mine it than it does to actually have the coin.
To get it.
So that's the problem with Bitcoin is it's extremely expensive. This new Ethereum Lite is going to be about 99% cheaper, which also attracts all those wonderful big businesses, governments, banks, and things like that.
Sure. Now, if you can't predict the future, and life happens, right? How do you plan for it?
Great question, because you have to, and
Yeah.
every plan for every person is different. You're in a different place in life right now. You're a different age, or the younger you start, the less expensive it actually is. The older you get, the more expensive it is. But the older you are, you typically have more money and can afford it.
Yeah.
Maybe more readily. But there's different ways to plan for it. Again, everybody has different concerns and thoughts about what to protect and how to protect going forward. But planning. I can't emphasize this enough. Planning. If you got a plan, make a plan. And you have to have your spouse aware of that plan. And it doesn't hurt to allow your kids to understand it once they get to a certain age, to understand there's a plan in place, because the passing of my uncle isn't going to just affect his wife. It's going to affect his kids. It's going to affect his grandkids.
Yeah.
So you need to have a plan in place so that there's some peace of mind. And that's what I ultimately do.
Yeah.
Is bring peace of mind. Because it's a great way to live life.
Yeah. And it doesn't matter what kind of safety net you have out there. It may not be wide enough for all of life's happenings, but it could cover several.
Well, and hence, no plan is perfect, right?
Right.
So you're constantly, whether I meet with my clients every 6 months or 12 months, and certainly no longer than that, or even more often if they wish. But we make adjustments as life happens.
Mm-hmm.
So, whether there's a change in somebody's getting married, in college.
Yeah.
There's different strategies for college. We've talked about the infinite banking concept that I brought to the show last time, and how to be your own bank and recapture all your money. Those are important factors that if you start early enough can be a huge difference in your life financially.
And I think one thing that people should know and should think about is there's people like you who have a far better literacy than themselves. And, every day we take risks. It's just what risks we're comfortable with. Every day you get into a car and you go 60 miles an hour, that is a 2,000-pound bullet. But it's a risk that you've become comfortable taking. And when you don't understand it or you're uneducated about it, maybe the strategies that you're going to help people understand might be uncomfortable to them, or they're, oh my God, I couldn't do that.
Well, there's so many misconceptions about my world, and it seems like everyone I sit down and talk to, the first thing that goes on is they want to tell me that they know all this stuff.
Yeah,
and it's great, because then I know where they're coming from and everything. But then I realize what they don't know, or what they're misconceiving about what they know. And I've only run into one or two people in the last 5 years that have actually been well set up and well positioned and gotten their lives in order. And the idea is and those people, friends of mine, they don't sit and watch the market every day. I don't care that Monday it was down 700 and that Tuesday it was up 500, and dodge that bullet, and dodging bullets all the time in that market. And there's ways to set yourself up where that's not really going to be a big concern.
Yeah.
So there's ways to protect those monies in the market. There's ways to protect other monies, and ways to get guaranteed income, ways to determine what your income is going to be in retirement, what you want, what you need, what you can have. Ask a business owner, what's your business worth? Oh, millions. No, really. What's it worth?
What's it worth?
And I guarantee you there's a discrepancy between what it's really worth and what the owner thinks it's worth.
Right. Oh, yeah.
Because I do those valuations quite often.
Most definitely.
But yeah.
And when we take a look at some innovative strategies to help when life happens, why is it? And you may not know this. Why is it we don't think life's going to happen until it happens.
Yeah, none of us believe it's going to happen to us.
Right.
All right. So I'm a certified long-term care specialist. I know the stats show that 72% of people with a long-term care policy are going to use that policy at some point in life.
Sure.
And you'd be surprised how many people are even in their 30s and 40s using a long-term care policy, already on benefits. But you talk to people, and I guarantee everybody I talk to has told me that they're in that 28% tax bracket, or that 28% bracket that's never going to need the long-term care.
Yeah.
But there's a misconception. They say, well, it's use it or lose it. No, that's what they were 20, 30 years ago. Nowadays, they have much more benefits, including building cash value, having a death benefit, getting your money back if you want it back, and then obviously having the payout of the benefit. Because a long-term care policy is what it is it's a paycheck that kicks in when you need it the most. It doesn't have to cover 100% of the costs that are expected.
Mm-hmm.
We've talked about this. My mother's been in a home for 7 years at about $6,000-7,000 a month.
Whew.
Yeah. And she's got dementia. And when dementia gets to a certain point, you have to go to a new facility, and that gets upwards of about $15,000-17,000 a month.
I was going to say 6 to 7 is pretty reasonable.
Yeah.
In today's world.
Yeah, then that looks reasonable.
Yeah.
It depends where you live.
Yeah. Now, when you're taking a look at something of that nature, again, at 40, heck, even my age, 52, you're kind of like, I see it, but I don't,
We go through each decade. I think our mindset changes. We grow up, we start understanding what's important, what's not as important. You're young. I want that hot car.
Yeah.
I want it souped up. I want big tires. I want to go fast.
That jet motorcycle or whatever.
Yeah. And when you get up, I said, I'm going to be 60 here pretty soon. And it's like, I don't need that anymore.
Right.
I don't want to waste money on that anymore. There's more important things. You change in that way. And from going out to the bars and partying and trying to meet other people and stuff and find that significant other, that's in your 20s or something. Yeah. And then in your 30s, you're settling down. And, in your 20s, you sit there and go, you don't even think about owning a home.
No.
And then all of a sudden in your 30s, you find out you're married, you got a kid or 2 or 3, and you live in a house, you got 2 cars, and you're like, how did I get here? And it's like, and how am I paying for all this? Yeah. I mean, I never thought I could do this.
Yeah.
And you do. It's just a natural flow of life. But, you should plan to protect these things, protect your family, because like my aunt and uncle, they're she's getting exhausted trying to take care of him. And that's typically what happens is when a family member does get injured or becomes ill, other family members jump in to help out, and typically it's the spouse, and the spouse will go downhill very quickly.
Yeah. The other thing when it comes to planning for life is to understand that a home is not an investment.
Right? Unless you like losing money.
Right. It's really a money drain when you look at it. Yeah. Unless you're going to be there for longer than 15 years. Right. And you only have a 15-year mortgage.
Yeah. So that helps.
So people are like, oh no, hey, no, you end up getting a 30-year mortgage and moving in 5 years, and you don't have any equity.
Right. You're paying all interest.
And so, the other thing is, collector cars or something like that. I've got a good friend who has I want to say a Nolan Ryan rookie card or something, valued very, very high, in mint condition. Right. And they keep it in a big Bible. Right. And they're like, oh man, this is worth da 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 da. And I'm like, no, that's a piece of cardboard. And they're like, what? I go, until you sell it, it's a piece of cardboard.
Right. I've spoken with potential clients that say, okay, all of their assets are real estate. And I said, can't really put a plan together for you because your money's all in the real estate.
Right.
You have nothing else, no IRAs, no Roths, no 401ks, no other investments. So until you realize that money,
right,
and and owning a home, you can think about it in many different ways. Do I get a 30-year mortgage but make an extra payment a year and drops it down quite a bit, but have the luxury of, if I run into trouble, I don't have to make that extra payment. Or you do a 15-year because you want to pay it down fast. But the reality is you're paying a lot of money for a home. If you look at that amortization schedule and you see how much you're actually paying for that home, throw in maintenance, throw in taxes, throw in all the other monies that go into that, the insurance and things that go into that home, you aren't getting your money back.
No.
Not even in this market today.
That's correct. That is correct.
You're just not as much underwater as you used to be.
Right. Yeah, exactly. Or you're maybe at a break even when you take a look, so if you're 15 years in and you go to sell that in today's market, you might just recoup what you've put in.
Yeah. And you might even make $40,000, $50,000, $100,000 depending upon the situation. But if you look back at everything you spent, you're still not making money.
No.
It's because we talked about this and if you sat down and budgeted and took all of your debt, your credit cards, your gas cards, your Kohl's card,
all your $5 subscriptions,
your mortgage, and your car loan, and you just take the interest that you're paying on an annual basis, and that is the majority of where your money's going.
Yeah,
for most people,
it's interest.
Obviously, a lot of people like to say, "No, I pay everything off every month." Okay, that's great, but where's the money now?
Right.
It's gone. You don't have it anymore. So, if you could turn around and make and put that money back into your own pocket and pay for things, that's something I'd like to help people learn how to do.
Yeah. Now, when it comes to working with folks, a lot of people like the tangibles. Right? Hey, I got to be able to touch it and feel it. You're talking about a crypto currency. You're talking about a bond or mutual fund, or I don't know what you guys do, right?
Well, you can't even get a stock certificate anymore.
Right.
They don't make those anymore.
They don't make them.
If you want one, you got to pay double.
Sure.
Yeah, I've got someone reached out to me and said, we want to buy a share of
whatever.
Elon Musk's stuff, and she said, can you help us find out where we can do that, because the only place we saw was we had to pay double. And I said, well, you can go to this website, you can just print it out, and it's not real,
right?
But it's representative, and that's really what you're looking for, because they were buying one single share for their son turning 16 or something. And I said, so can do it that way, because he can't have an account anyway and hold the stock. So quick, easy solution. But tangibles are going by the wayside, right? I mean, everything's internet, everything's online, and even cryptocurrency is online. And yes, are there Bitcoins? Yes. Mm-hmm. There are not going to be a physical coin for Ethereum Lite.
Right.
I can tell you that. This is just all done online.
Yeah.
In your wallet.
Well, and I mean, so for people who are getting serious about thinking of retirement, so people in their 50s, mid 50s, I would guess, and on up, who grew up with different financial literacy, right? It's, hey, pension, they're gone. Hey, 401k, I don't even understand that either, right? But I know I got one if you ask.
Oh, yeah. I used to, when I worked at a certain bank doing underwriting of loans for a little bit, I probably helped somewhere in the neighborhood of 30 fellow employees that to do their 401ks and show them what's what and what choices were best for them. And it was different for each one of them. But they're not the best vehicles. They're just not. But that's the only thing people know now.
Yeah. So what do you tell folks like that, who come to you, who, they've been in the workforce for maybe 20 years plus.
Yeah.
And they really don't have a plan. And they are still kind of in that old 1980s mind, well, I need to have some stocks,
Right.
you know.
Right. I love mutual funds because I'm diversified.
Yeah.
Yeah, that's great. Now, when the market drops 40%, how's that diversification working for you? Not so well. You know, when people come to me, it's typically because, maybe that's the next thing on their list. And you're right. They're usually in the mid 50s and later, as old as 70, 75.
Wow.
That's when they learn that, if I'd only started it when I was 25.
That's right.
I would have been so much better positioned, so much better off. But they don't. And that last kid just finished college or is finishing college. Is like, hey, what's next on that list? Oh, yeah, retirement. Oh, crap. I have no clue where I stand on that.
Right.
Financially. That's very common. And so you kind of take a helicopter view with the folks. Where are we at? What do you got going on? Do you have any insurance? Do you have any annuities? Do you have long-term care? Do you have investments? Do you have other assets? Let's take a look at these things, and let's just get a good picture of this so that both the husband and wife see it, because they're both going to have different ideas,
right?
What they think they want going forward, and they say, and then you have that conversation. You know, what is it you're looking for? What kind of income are you looking to get? How are we going to get that?
Yeah.
You know, obviously part of it comes from Social Security. Maybe there are still a few people out there that have pensions, but when we got rid of pensions back in the 80s, basically, what we really did was we just got rid of the insurance side of
right.
securing a guaranteed income in retirement. And all we left was the high risk side, the 401ks.
Yep.
And so I try to introduce ways in which you bring that insurance blanket back into play for protection.
Well, I remember when the insurance were the bad guys.
Yeah, but so many people have a misconception about insurance.
That's right.
I know what insurance is. It's just throw a party for when I die. Worst bill I pay every month. Hate it, hate it, hate it. Well, you got sold the wrong policy, or you don't know what it can do for you.
Yeah.
Because I will tell you, I've been in this world, or this business, financial world, for over 35 years, 20 years in the trading pits. And insurance can be pretty darn exciting if you really get to understand it and know it, and be open to that. But because there's a lot of things it can do for you that it creates wealth, and it's risk-free. But again, as you get older, it gets more expensive.
Yeah.
To do the same things. But so, and we get back into life happening, and, of course, there's accidents and things like that. One of the things that I like to do that I think does make me a little bit different is I do like to talk to people about their personal lives as far as, do they have a will? I think I brought it up last week. Yep. It's like the first question I like to ask, because if you don't have a will, then you have absolutely no plan. Nothing going on.
Nothing.
But then, what about powers of attorney? What if the spouse that generates the most income becomes ill or again, hit by a car or something? Do you have power of attorney to make medical decisions? Do you have a power of attorney to get into his or her 401k? Because if you don't, you can't get into it.
Right.
What if you need funds? Well, in the case of my uncle, he has a life insurance policy. I was very happy to hear that. And I said, did you know that you can, we need to look at that policy and see if there's accelerated death benefits? Because if you're only given an X amount of time, and in this case, 1 or 2 months, you have access to those funds, a percentage of them. So if and I looked at my aunt, I said, if you're in need of finances because this is getting expensive for you to go through this process, here's a way to get money.
Yeah. Folks, you're listening to 21.6 The Net here, and we are talking innovative strategies with Bill Haase. If you have questions for Bill and you want to get to him offline, reach him at haase.bill@gmail.com. That's haase.bill@gmail.com. Or they can call you.
Yeah, let's stick with the
email.
The emails
it's
now.
It's a little easier.
My phone is kind of getting blown up these days, and which is a good thing. but I want to be able to get back to folks in a timely manner.
Yeah.
Timely being 24 hours or less.
Yep. And of course he gets notifications when those emails come in, or you can reach out to us here at 216thenet@gmail.com. If you have questions for Bill as well, we can forward those to him and get you in touch with him there. Innovative Strategies is all about taking a look at money, the way you think of money, your literacy on money in a different way, in an innovative way.
In an innovative way. And you know how I kind of came up with this, and I think I might have mentioned it to you, but doing some studying on some things in the market, and one thing I learned was the one thing that's always kept America strong is innovation.
Yeah.
Innovation brings things out, and we have a lot of innovation going on right now, and I think that's what continues to help our markets stay healthy, and grow, and when there are other powers that be that might be tugging to go the other direction. So, but that's always going to be in the market.
And really what I want to help people too with what you do and how you do it, and the innovative part of it isn't necessarily a huge risk, but let's take a look at 2020. A lot of companies became very innovative with how they continued to do business. And we're thankful for that. And that's kind of where we're at financially with you.
Yeah, companies, a lot of companies right now are scrambling to become more innovative.
Yeah.
I think I mentioned to you how I went to McDonald's at a drive-thru and ordered a McChicken, and it was $2.15. They gave him $5.25, and I had to explain to him how much he owed me in change, and he said, "Oh, thank you." He couldn't make change. And then I got the wrong sandwich. I'm like, "You're 0 for 2." So you need to be innovative.
But
at least get
you ate the
something
sandwich they gave you, didn't you?
What's that?
You ate the sandwich they gave you, didn't you?
Yeah, I was already down the road.
That's it. Yeah.
So I was just, because I'm running around so much, I despise going to fast food places. Right. It's just not good for you. It makes me tired. But when you don't eat for a day and a half, you got to say, well, all right, I'm just going to jump in here and grab something.
That's it. I got to nourish myself somehow.
Yeah.
Now, where's a wrong change and sandwich? Eddie says, yeah, absolutely. If you're at ground zero and you've created a will, right?
Yeah.
What's the first step after that for somebody to start working on an innovative strategy?
Well, if you're at if you're at ground zero to me is somebody who's just getting out of college and starting work.
Okay.
All right. And I do work with people that young. In fact, I have a couple of 18-year-olds that have been putting a little bit of money into a life insurance policy and a little bit of money into an IRA or a Roth.
Nice.
Just to get started. And it's, even if it's only $50 or $100 a month.
Yeah.
Smart move. But as they get into the workforce, you need to start then. Do you want to participate in a 401k? You do if you get matching funds.
Yeah.
Typically, putting more than whatever you're getting matched doesn't work out all that well for you, because 401ks have a limited offerings of what you can invest in.
Okay.
All right. And there's usually the people who are higher risk, then there's the medium risk, and then there's the lower risk types of investments.
Yeah.
But nobody looks at how much of those investments cost.
Right.
And they all cost money. So you've got your break-even point already after that cost.
Mm-hmm.
And that's taxable money in the back end too. So, but it doesn't hurt if you're going to get matching, take that free money and put stuff in, but then also budget to put money into an IRA or a Roth on the outside, which has way more opportunities for investment vehicles.
Yeah. And that's awesome. Is there a percentage, is there, a lot of folks are living paycheck to paycheck or stimulus check to stimulus check now. So.
Yeah. And the reason why we're living check to check, as I did for many years, is because we don't know any better. We're financially illiterate.
Right.
All right. So you need to, and you hear this all the time, right? You need a budget, find a budget, get online, find a way to create a budget and stuff like that. And I say, take a look at where you're spending your money.
Yeah.
And, because look at the teenagers nowadays. It's nothing for them to go to Starbucks how many times a day and spend $7 every time on a,
Well, and let's talk about that for a second. You want to talk about innovative strategy. I think Starbucks is one of the largest banks in the world now because of everybody throws in $25, $30 on their app.
Yeah.
And it just sits there.
Yeah.
Brilliant strategy.
Right.
For Starbucks.
And just like a bank, they're just making pennies or quarter of a penny or a half a penny. But it adds up. Again, if you sat down and figured out how much you're paying out in interest and how much you're paying out in taxes, you will find that is somewhere in the neighborhood of 35 to 60% of your money.
Wow.
And it could even be higher than that.
Wow.
Depending upon where you're at in your mortgage, especially, because obviously the first, everybody says, I got 3%. Awesome. 3% mortgage. I refied. Woo! I saved $200 a month. Great. What are you doing with that money? Number one. But number two, it's not 3% a month or 3% a year, because the first year is like 78%.
Right.
Because it's all going to interest. And people don't realize that. And when they start seeing how the money works, they'll get smarter about it. And they'll start making better decisions. Instead of going out to dinner every night, you start making dinners.
Yeah.
You start saving money that way. There's folks out there that make their whole life on clipping coupons, and smart folks. But there's just different strategies and different for different people, but they're all based on similar products and services that help you out. To bring protection. Cash value in a whole life policy is really what's protecting your money that's in the market. So in retirement, you use that money to pull out tax-free in the years when the market's down, so you don't pull more money out of the market, make it that much harder for your money to come back.
Okay.
So that's one simplistic strategy. It gets a little more complicated than that because it has to be designed properly and with the thought of trying to grow the cash as quickly as possible and not really worried about the death benefit side of it.
Yeah. Eddie says, I think it's important to inform your kids about investing. My 12-year-old son asked me to open a separate account for him to invest. He bought some crypto and stocks. So far, and that's, I don't know if there's more.
Yeah, that's awesome. A lot of young people are trading. A lot of young people. I think I said last week, my son has a friend that got involved with the Robinhood GameStop play and made $400,000 in a week.
Yep.
He's not a trader. He barely ever bought a stock or anything.
Luck of the Irish.
So these things can happen. It is the Wild West when you get into cryptocurrencies. Is that potentially possible? Absolutely. Without question. With stocks, a little bit harder, but there's some that take off.
Well, again, and it's that literacy, right? It's cool to open those accounts for your kids, help them out. But what do you do with it? How do you? Yeah,
12-year-old, might be a little young. I get it. So I was involved in the electronic trading when it first came out in 2005, 2004.
Yeah.
I was the very first one to do side-by-side electronic and pit trading. So I'm buying and selling on a computer, and I'm buying and selling in the pit, hand signals. So we saw the writing on the wall, and then it moved up to where guys moved into the office and started doing algorithms and things like that, where it would trade for itself. Of course, you had a lot of issues like power outages or, internet outages and things like that created more risk. So what happened, the involvement is when it got into businesses and companies starting up trading rooms for electronic trading, what they really wanted is the younger people who were really good at video games, because they would just sit there and stare at that screen for 2 or 3 weeks and all of a sudden go, oh, I got it. I know what to do. And this just start going crazy. So, it works, and it's good, to start young and to learn. One thing I would caution is don't go for a big play. Don't, be careful, because like my son's friend who made $400,000, he came to me and I had a conversation with him. I said, look, the house doesn't like to lose money.
That's right.
Right. And so you made a big hit, and it worked very well for you. And that's awesome. But I'm going to tell you, it doesn't mean you know what you're doing. It just means you got lucky here and you hit a good one.
Yeah.
And even traders that I know and that were in the pits for a long time, they would get to the point where they think they're really good at this and they're really smart, and they would just get spanked,
smoked. Well, and if you are starting, and I think it's incredible to start your son at 12, get him into a losing situation. Again, don't put a lot of money into it, but let him understand the downside of things too.
Yeah, I mean, you actually learn better that way.
Right. What happened here? What happened to that money, Dad? You lost it, son.
You'll find that you look at markets differently when you have to make money versus when you want to make money.
Right.
And that's wiped out a lot of traders over the years. I've seen a lot of traders in the pits that have even been in the pits for 20 years have a bad streak. Mm-hmm. And every trader thinks the next trade's going to get them back into the game.
Yeah.
And I've seen enough not ever get that next trade to get back in the game.
Yeah, not everybody's a Wolf of Wall Street.
No, I mean, and there was a big myth about, everybody down in the trading pits was millionaires, and that's not true.
Ooh.
No, there were a lot of journeymen down there, and I was one of them.
Yeah.
I lasted 20 years, I like to say, and loved every minute of it. But
folks, if you don't think so, he's only 40. I mean, take a look. It's a stressful job. No.
Yeah, that was 20 years ago.
That's right.
But yeah, and then there's a lot of tricks to trading. Eddie, keep in mind, a professional move is to get into a position, and as that trade goes higher and higher, you do what's called a 25% retracement stop order. So you put in a stop sell 25% below the market. As the market goes up, you move the stop order up. You never move it down, always only move it up. Because markets have a tendency when they do what they're called a correction, that's usually a 20% is a clean out that they call it, and then it should stop and go back up. Doesn't always do that, especially with individual stocks. So you have that 25% stop sell order. So it can lock in your profit, or it can lock in your losses.
Your losses, right?
But and limit your losses. So another idea is to talk to your son and say, why do you like this stock? What's got you interested in this investment? And where do you think you should get out on the downside? And where do you think it's going to go to the upside?
Yeah.
And have those conversations because, and then there's, you can start looking at charts. You can start looking at, you can do analytical stuff or you can do fundamental.
Yeah. Of course, my middle son, Luke, got into stocks when he was 10. GameStop, Harley Davidson, Walgreens. He's 25 now and has continued to do quite well.
Yeah, that's awesome.
Oh yeah, that's what my grandfather always said. My grandfather always said, get into the sins, right? Alcohol, tobacco, gambling, women, drugs, right?
Yeah, that's mafia way.
Right.
And that's certainly one way to live life and stuff, but you probably won't live a long life, but
no, I mean, invest in those things, because back in the day, like, Philip Morris,
Hey, look, if you'd invested a year and a half ago in those very things, you're probably making good money because everybody's stuck at home. What are they doing? They're drinking more than they ever did. They're smoking more than they ever did.
And they're on more prescription drugs than ever.
Butts than they ever did. More on prescription drugs than they ever were. It's, and you look at things like that. That's opportunity.
Yeah.
And, but it's hard to get your mindset.
That's right.
I'll make you an offer you can't refuse. That's where you have to train your mind to think about. And to start off, if you're just getting started, think about what affects your world.
Yeah.
Don't think about what affects the whole world, just yours. And you'll find something in there, whether it's a product you use all the time or a service or something of that nature. And then you start looking at, all right, what companies work in that area? And then, who are the good ones? I'm not going to sit here and tell you, well, invest in the big stocks and get your dividends. It's not a bad play for part of your portfolio.
And you mentioned a few weeks ago, if you're going to jump into something that might be a little bit risky, make sure that it's money that you can lose. Right now, a lot of people think that they can't. I don't have money to lose. But if you watch what you spend over the last month, you may have spent that $1,000 on hot wings and beer.
Yeah, right. And you might
lost
realize that you can lose more than you thought
Yeah.
with the money you have in there,
Yeah.
because there are trades that you can put on that are unlimited downside.
Right.
You think buying a stock has a limited downside. It's zero, right? Stock can go to zero. But people play in options, or they play in futures. And when you play in those worlds have unlimited types of risks.
Yeah.
You know, I do want to point out, as I've said, I'm not security licensed, so I don't talk about specific investments or anything of that nature. I'm talking just in general.
Yeah.
And I'm not securities licensed on purpose. I do have a team, and members on my team are licensed. And when I work with people, I use my team to help me out in those areas. But because nowadays compliance is too strict, and it limits what I can do for myself personally on the investing.
Right.
So it's just not worth it.
Yeah. And I think that's an important thing to understand. And you have a team of people, which a lot of times some financial advisors don't. I'm your one-stop shop, Pop. And what I think is brilliant about how you have innovated your business model and how you help people is you've put a team together of people that are very trusted to you, and that's cool. So it's not
I mean, to me, you have to.
Yeah.
I no advisor is the end all be all in every area. You can't know. Most advisors, we said last week, they like this. The buzzword now is I'm holistic.
Yeah.
What does that mean? And I beg you to ask that question.
I'll meet with you in Birkenstocks.
And typically what they'll say it means is that they do investments and insurance. Well, that's great. That's not holistic, but that's great. And the reality is no, you don't. 80+% of advisors out there either do insurance side or they do the investment side, and they might dabble on the other side a little bit. Right. But and then you get into the business side of things. Buy-sell agreements, key man insurance, golden handcuffs, health, life, dental, 401ks, and SEPs, and all kinds of other areas. And you can't. One person just can't know it all. I mean, and be able to bring it all into play at one time, because you can't think of all of these things. So you have a team. Yeah. And each member of your team is specifically, geared towards one area. And so, when I have and speak with a new client, I don't make any decisions about a specific plan or anything to present to them without talking to my team members. Yeah.
Now, folks out there listening, again, this is Bill Haase. You can reach him at haase.bill@gmail.com. Now, he's given you probably a 55 to 60,000 foot overview of some of the innovative strategies you can do, because not every strategy works for every person. So if you want to get a little more personalized, reach out to him or reach out to us here at 21.6, and we can get you in touch with Bill. He is an expert at what he does. He's helped several people, and but he has to this show has to be vanilla.
It does. It does. I have compliance probably calling me right now, but that's okay. I've been dealing with compliance 35 years. But here's the thing: I'm not here just selling my wares. I'm not trying to get you to become my client. Of course, I'd love that, but because that's what I love to do. I love to help people gather peace of mind. But the reality is I can't work with everybody, and you need to find just an advisor and, talk to them. Yeah. Feel comfortable with them. If an advisor is the first thing. So here's my aunt in Wisconsin. She said, I called up an old friend I thought was in the financial world, and she used to be, but she's retired. And she said, here, call this person. She'll take care of you. She called the person. The first thing the person said was, okay, I need you to get a whole list of all your assets and everything you got together. They've never met. And she wants her to get all the monies and everything together, and then you can come in and we'll talk.
Wow.
To me, that's maybe that advisor means well, but to me, that kind of is a red flag, because it's kind of saying, I just want to know how much money you have so I can play with it and earn all kinds of commissions.
Or figure out if I want to work with you.
You know, and as I've said, my first meeting with a client, bring nothing.
Yeah.
Just bring your spouse, and we're just going to have a conversation, because you may not like me. You may not want to work with me, or I may not want to work with you.
Right.
You might be somebody that we just don't mesh. So talk to an advisor that you think you like, or that somebody else recommends. And trust me, people don't walk around recommending advisors. I know that, but you might ask your friends, hey, you got an advisor? I'm thinking about talking to one. And they might say yes. Give this guy a call and interview them.
Yeah.
But don't bring in your whole picture of all the monies and everything you got, because you just got somebody drooling on the other side going, all right, let's see. How can
pull it in the boat? We got this one.
Because advisors have a tendency to start adding up the monies they can make before they've even had a conversation or done anything.
Now, as we're talking about life happens, and again, you're not the stickler saying, "Oh no, don't." Hey, live life, have a little bit of fun. Oh, there's strategies for you to be able to make money and live well, and then there's strategies that will also allow you, while you're doing that, to go out and have a little fun as well.
Yeah. So I talked about that pie where so much percentage goes to paying taxes and paying interest on things. And so by putting a plan together, part of what you're doing is you're reducing those pieces of the pie. When you reduce those pieces of the pie, what's left over? Oh, the piece of the pie that you were using for personal stuff gets bigger and bigger. Right. And you can do more things. Right. But people like to pay out everything first and then pay themselves last. There's ways to actually pay yourself first, right?
And pay yourself well first.
And it's not overnight, right? Nothing's overnight. I know we're in a society, everybody likes instant gratification. I mean, I order Grubhub and it better be here in 5 minutes and whatnot.
Right.
For some people, it can be very quick. Other people, it takes 3, 4, 5 years, maybe even as much as 10 years. Mm-hmm. But there are ways to get 100% out of debt. And if you're going to retire, I guarantee you there's one thing I know is you want to retire debt free.
Yeah.
You want to own your house outright. You want to own your cars. You want to have no credit card debt. You want to go into retirement debt free. Every single person I've talked to has told me that. And there's a way to do it.
Yeah.
No matter how much debt you're in, there's a way to do it. A lot of people talk about Ramsey and they like his ideas and his thoughts, and some of his stuff is very good and can work, but you have to have discipline.
Right. And you'll never, a term, and I want to get your take on this, a term that I hear all the time too is financially free. Well, you're never financially free. I mean, you might have money to make choices.
Right.
You might have a plan in place that helps you make better choices where you're not a slave to the interest out there, but you're never financial. I mean, money is what makes the world go round.
We talked about long-term care, and that's one thing. Some folks that I speak with that have, a few $1 million or several $1 million, and they'll say, I'm going to self-insure. It's like, okay, great.
Awesome.
But understand, you can blow through money very, very, very quickly. Open heart surgery, if you don't have complete coverage, now Medicare will cover some of that. And as you go, people think Medicare covers, that'll take care of me.
Yeah.
Medicare doesn't go past about 100 days. All right. And really after 20 days, then you start picking out of your pocket. And then after 50 days, it becomes higher and higher and higher. People don't realize these things. And so healthcare is a number one reason why people go bankrupt in retirement.
Yeah. Well, and speaking of on plans, take a look at your best, take a look at a majority, 60, 70% of all professional athletes who are millionaires and millionaires when they were playing. and see if they're millionaires today. There's professional athletes who are bouncers at bars. They're getting paid minimum wage.
You remember me telling you, I used to be a member of the Illinois NFL Alumni Association.
Right.
And I joined specifically with Desmond Clark. He was running it as a president, and I was coming in to try and see if I could help some of these guys with their financial scenarios. The only problem was the only guys that would show up to the quarterly dinners we would do would be the guys who had no money, and they were showing up for a free meal, and we would literally put the takeout containers there, and they would pack up 10 of them and put them in their car and take them home.
Sure.
It was not a pretty experience and humbling, to say the least. But yeah, I mean, it's lottery winners. And that's another issue that some people have nowadays. We have baby boomers are going to pass along about $69 trillion. And one of the concerns is, well, my kids are going to be like lottery winners overnight. How's this going to affect their lives? And some of my kids I know will be able to handle it and some won't. Yeah. And so there are ways that, you can put plans together to trickle that money out so that you don't ruin their lives, but you can enhance their lives as they go along. And there's ways to do that too.
Yeah. And it's, take a look, we've all heard the lottery winners are bankrupt within a number of 5 years. A number of years, right? Yeah, 3 to 5 years from winning because they don't have a plan in place.
They don't have a plan in place. They don't know how to handle that kind of money. Everybody and their brother comes after you for, can I borrow some? I want to start a business and I want to do this. And you want to be kind, generous, and helpful. I mean, you were given this gift and you want to share it, and then you don't have it anymore.
And I think your innovative strategies are unique in the fact that I don't understand what a millionaire. I don't understand $1 million. I've never had it. Right.
Yeah.
And
different
so
mindset.
if I can't conceive it, there's a good chance that I'll never get there by myself. Right. And the interesting thing I think is, I in my new position, I have got the opportunity to make more money, and I turned it down because it was incomprehensible money to me. Right.
Yeah, so that goes back to the fear of success.
Yeah.
Really, I've experienced that. No question. Fear of success is inbred in a lot of people. I don't deserve it. Some people feel, and of course there's always the other people that say, I deserve all of it. I want more. In this cryptocurrency play that I'm doing, and people want to put in more money, and I tell them, don't. I said, if it does well, as we think it's going to, you're going to do very, very well. And just how much do you really need?
Yeah.
Let's think about it that way, right? Pigs get fat and hogs get slaughtered.
That's right.
So, so I tell people no. And they look at me like, what kind of person, what kind of guy are you to get me in this and tell me, no, I can't put more money in? Because I don't want it to affect your life in a negative way. And if it doesn't work out, you're out money that's not going to affect your life. And you'll say, all right, so I gave it a shot. I keep letting you put more and more and more money in, and then it doesn't work out. Now it's my fault.
Now it's your fault. Bill. Yeah.
So I emphasize strongly that this is just a pure flyer, as we used to call it, is just a pure faith type of investment.
Striking while the iron's hot.
It's not based on any strategies. It's not based on charts. Right. It's not based on fundamentals, nothing. Just throw some money in and jump off the cliff and let's have some fun.
See what happens. That's
and really everyone I'm working with that are in this, that's the one thing they say to me most is, wow, this is fun. I'm learning about a whole new world.
Yeah.
I have great opportunity. I love it. I don't care if I lose this money.
Yeah.
Let's just enjoy it.
Yeah.
And
that is awesome. All right. We're on that back minute. So let's get it out there again. Thanks, folks, for joining us on Innovative Strategies here, 216 The Net. You can reach Bill at HAASE haase.bill@gmail.com. So haase.bill@gmail.com. If you have questions for him, you can also reach us here at 216thenet@gmail.com. We'll make sure that it gets to Bill. And, the fun thing is you have to start thinking about money like you've never thought about it before, because the world is changing in an instant and life happens in a second.
Yeah, it is. There's a lot of talk about play on gold right now. And honestly, do I think gold will probably do well? Yes, because so many people are talking about playing it. But do I think it's the future? No, not a chance.
Yeah. No chance.
Not a chance.
All right, join us next week. He'll be back, but give him a call or an email because he's available, and he'll get back to you within 24 hours. For all of us here at 216 The Net, thanks for getting stuck in the net with us. Have a great day.
Thanks for watching.